In this video, traders, we're going to look at how to always be prepared for that outlier move or trade. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so an outlier move or trade is something that's outside the normal distribution, if you like. The statisticians are going to tell me the correct terminology, I'm sure they are, but from a trader's perspective, it's just one of those trades that is just unusual. Doesn't happen very often, but often results in a large move that's not normal. It's not what we normally see, but is often a massive supply-demand imbalance that if you can get on it, can really kind of boost your month. So what do I mean by being prepared for this? So very often, guys, we go into the day or we go into the week, whatever we're trading, whatever time frame we're trading, and we have a trading plan. Right, we say, okay, these are levels I want to work off. This is what I want to do. I'm going into the day. I'm looking for buys off the open. I'm looking for a flag. I'm looking for this level to be breached or held or whatever it may be. Okay, and we kind of sit there and we trade that. We make money or we don't make money depending on what kind of day it is. And then we kind of look in the afternoon or we look at the rest of the week and we kind of plan like this. But very often we forget about that one time a month, or maybe one time every quarter, it doesn't matter, we're going to get an outlier move. And the outlier move, if we're not prepared for it, will just disappear without us because we're so used to trading normal market conditions, the ebbs and flows, the moves of an ATR, maybe two ATRs, maybe get a bit of extended move one day, maybe get, all the type of patterns that we know commonly occur, that we forget about the moves that can come out of nowhere and can really make your month or quarter if you're on them and you just leave them. So what am I talking about? So for example, one of the things that I like to do, and I'm trying to make myself do more of this, is to look for my favorite outlier move intraday. Now for me, that's going to be something like this. We've got a good uptrend intraday. It's up high. Everyone's bullish. Flags. You've maybe traded a few times off this. You've maybe caught the move and everyone's thinking, great, this is all very, very nice. But where's the outlier trade for this? Well, the outlier trade for this, in my opinion, is the full reversal that normally happens if there's some kind of catalyst or news or without it. We don't get it very often. I can't remember the last time we've had this kind of thing. But when we get it, what are you doing? Well, everyone's running for the door, especially if you're getting it at the end of the week or something like that. So if you're seeing this opportunity, it's an outlier. It's very, very rare. You want to get on it and you want to squeeze as much as you can out of it. So even having something like an alert or a sell stop here, in other words, that gets you into the trade at this level. So it's under the low. Now, this might be 300 points away if we're talking about the way and 30 handles away on the S&P or whatever market you're trading. Maybe it is currency pair and never likely to happen. But the outlier trade is, well, if we do reverse and we do take out this low, there's going to be a hell of a lot of stops under there. So the high chance that we're going to, if we do take that out, we're going to end up continuing downside and close right at lows from an intraday perspective. So that's just my kind of rough example of what one of the outlier trades I would look for. The key is, guys, to think about what's the outlier trade for you. If you're swing trading, is it that something comes out and it takes out the 5-day low or something? Is it that we kind of a specific pattern like this, like a full scale reversal? But thinking, okay, what's the very best trade? What's the very unlikely trade as well? And then how do I position for it? So my options are with this, for example, are to either set an alert a little bit above it, which is sometimes what I'll do. If I know that I can get to the screen and I can trade this and I'm not kind of done for the day, I could set an alert here and it says, well, listen, it's pretty close. You need to be on it. Now, in an ideal situation, guys, I'd be on it earlier on if I was watching, but let's say I'm not there. This is the point. We want something to get us into the trade or alert us to the trade for the outlier event if we're not available and watching it. So an alert that says it's close to it, so I can get to the screen and go, whoa, we've reversed 300 points in 30 minutes. Something's going on. Something's chaos. Not only is everyone now trapped, we've got whatever's caused the sell-off, loads of reasons to be pressing the short. Or we set an alert there if we kind of want it to go right to the low. Or, like I say, the other option, the better option, is to get something on. Get a sell stop that says, okay, I'm now in the trade. Now, of course, you could be vulnerable to a kind of some sort of spike and push back up. There's never risk, and there's no risk-free trade, unfortunately, in the market, guys. But The point is, if I've got that and I've got something on and I get alerted, I can come in, maybe I get alerted to that and I get some on, I come in, the market's kind of pushing lower, I can then choose to manage that position, add to the position, get more aggressive. But this is kind of an outlier trade that would stand out and would be very tempting to take. So what's your outlier trade, and how are you going to prepare to capture it if it happens? Take care, guys. Keep your risk managed. I'll see you next one. Goodbye.